Traders, Jeff coming back to you from Full Throttle Traders. Want to take a few minutes and kind of just make heads and tails of what happened in the market today, and also show you some of our plays that we took here. I just took a few scalps, kept it a little bit lighter, and imagine being short the market and for some reason and not having a stop in or having a stop that maybe had a stop limit and then market jumping over would not come back, would not have been good. So those are always important to to talk about and always use. So I figured that we would use a day like today to talk about that. Anyway, let's take a look at the markets here. Hang tight. I'll be right over there. All right. So let's take a look here. The stock surged to one of the biggest gains, one of the largest gains since World War II. I've never seen the market like this. I've been trading most days since 2020 or 2002. And this is the largest day that I've ever seen. Never thought this market was even capable of doing this here. It just goes to show you what words can do and what that could ultimately create when they get a lot of surges. Now, it helped that the market was basically pulling down 22% in the NASDAQ or the Qs, and then to have that kind of get back up where it was. So a lot of stocks were oversold. So even though we had a big surge, a lot of stocks were just undervalued. They went from equal value, fair value, overvalue to undervalue. So the market will try to make that back up and fix that. And where the market started today and where it landed today at the end of the day is exactly where it should have done. It is never off. Anyway, so look at that. U.S. stock market experienced a significant rally following President Donald Trump's announcement of the 90-day pause on most tariffs. Here's the key point. With an increase to 125% on Chinese imports. So, there's a little bit of, you push me, I push you back going on to the markets right now. So I don't know how that's going to play out in the market. But the lion's share, over 50, 60, 70 countries. Again, the reason why this was done to put a wall back in the stock market, to bring it back up, and also to negotiate those other people that are now seeking out to minimize that exposure towards the tariffs that were put on all the countries. So I suspect that 90 days of pause probably will end up going away as they do business with most of those countries, and maybe for the few that don't, they'll put that back on. It should have a minimal impact in the market. The indexes, the S&P jumped 500 jumped 9.5% to close at 5456. Unheard of, right? The Dow Jones, 7.9%. Never in history. Again, only twice in our lifetime. Once in World War II, we've seen this type. Now, remember, the market wasn't 40,000 points at the time, right? We're dealing with just a few hundred, so it wasn't hard to do that from time to time. But it hasn't, and until today, it did it again. And then NASDAQ composite surged to 12.2%. That was the biggest thing here, and I'm going to show you why. Because of what happened to the tech market. You can see the tech just made up some ground. It's been basically under pressure. They had it down to 22% as of early this morning trading, at least. It probably went a bit further than that, but it rallied back. So what was most overcooked seemed to kind of want to respond back to kind of fix some of that texture and those oversold positions short term in the market in here. Again, all this is coming on the heels on the beginning of earnings season, right? So we are just just now starting to kind of get geared up for earnings. So a lot going on in the markets in here. Technicals are important, but man, you really have to kind of know where you are in the market to be able to overcome some of these things. It's pretty amazing. And again, everything green, utilities kind of bringing up the rear. Even healthcare was down. You saw Johnson & Johnson gapping down this morning, Merck, AMGN, I think it was, and even some of the others, Pfizer. And then all of a sudden, when that market surged back, it brought even these stocks back up. Nothing can outrun the market. It's part of the market. When the market goes, at some point, it's going to go with it. Sometimes more, sometimes less, but it's going to go with it. We had a tremendous surge in technology today, bringing the NVIDIA back up into the 114, 116 area. A lot of oversold stuff through some of the outdoor things like Denki, DEC, who's had horrendous drop-offs in the last few weeks here, are now kind of getting back in line here, or at least starting to get back in line here. So tremendous one-day performance in the markets. Let's take a look at the overall SPY, Q, and IW. Now, if you saw the video yesterday that I put out here, I talked about how the market doesn't like to be away from either a moving average, and I use the 20 a lot of times, or the trend line. Now, this is a more pronounced trend line. It's a primary trend line. It's the right angle. The initial one came down here, kind of steep. And as we put the higher low in here, the double bottom back over the 8, although at 38% retracement to 200, it's where it failed. But you can see right in here, this was a tremendous gap. And in yesterday's video, I drew a big circle in here. I said the market is going to want to fill that gap. It does not like being away from the moving averages that much. Now, it can outrun those moving averages and continue further south here longer than you're going to be able to afford to hang on. Keep that in mind because we don't know where it's going to take a look here. So I wasn't expecting this, and so these charts have just flabbergasted here. It came back in there, but I certainly wasn't expecting that type of move back. So once stocks get down to here, it doesn't like to be away from the 20-period moving average. It doesn't like to be away from the trend lines, the 50. Those are the three main things that I typically look at here. And again, once it started surging up, it caught traction and momentum, short covering. Everything was just firing on all 8 cylinders here, all 12 cylinders in this case, push this market to close at the high. And even in post-market here, we're experiencing a little bit of an uptick in post-market coming to some earnings and, of course, a little pent-up demand at the end of the day and probably open with a gap tomorrow. Keep in mind, though, there are some CPI numbers tomorrow. We'll take a look at that in a second as well. So again, this is not the type of move I expected, but certainly it came on the heels of just some words from the president that caught fire in the markets in here. And this is something you're going to expect to see every day, every week, every month, or even every year. This is unprecedented. You can go back and say, I traded on that day, right? And hopefully you were long. So anyway, so that's kind of where we are there. And then if you take a look at that overall picture and you draw down the cues at tech, you can see I don't have that primary trend line drawn on here, but if I did, it would look something like this, give or take. You can see how much closer we are. We're right on the heels of this trend line. There we go. Right there. Let's go back to the spikes and get a little bit of perspective. You see we're a lot closer, and everything wasn't quite as upward tick here compared to the Qs in here. We got a lot closer to the overall top in here. Ironically, look where the Qs hit the 200 here, the red line in here before it melted down. And then finally, the IWM made a nice surging comeback as well. But see how that kind of pales in comparison? And that's just typical of the Russell 2000. It doesn't have the lift. It did pretty good this year overall with this move higher, right? From right about in here. It's done pretty well, but it certainly gave a lot of that air out in the balloon over the time. The last thing we'll look at is the diamonds. You can see here, this is just a representation of the Dow Jones. You can see from 370 to 408 and how that might look on the Dow Jones. You can see it's the same. I think I have it in here under the Joe 30 right here. Yeah, so same look to that. That's actually how the actual broader market did. So crazy stuff in a day like today. I'm going to take it down a little bit further and show you how we did today as well. So give me 1 second. All right, before I do that, take a look at tomorrow's news, April 10th. These are reporting here. We got core inflation, 8:30. So a lot of news at 8:30, CPI, a jobless claim still tomorrow. We have some Fed speakers coming out sprinkled in there as well. And then also on Friday, you have the PPI, right behind each other here. And you've got Michigan consumer sentiment. So these are going to be fired up day. If they see that this inflation rate is ticking down or at least staying the same, that's going to add a little bit more fuel to the fire. Now, keep in mind, the reason the market went up so tall today is because of the news, yes, but it's also fear and greed, right? It's anticipation of what they think the market might do over the next few days, potentially, but fear and greed. So this greed was so much today, right, that we may have stymied the move going forward. Keep that in mind. If you're long here, I would not expect that same type of move or even half of that type of move tomorrow, because there would be people hitting that sell button, taking some of those profits, ringing the register. And you got to keep that in mind when you're thinking about how far is the market going? How far can it go beyond this point? You have to think about people that were in down here are selling. And eventually it's like that bandwagon theory. As things begin to turn, that wagon will go downhill. If enough people, retail and major investors alike, start hitting that sell button here. And that usually stymies movement. It can end up great, it can end up positive, but it stymies the length of the second day in there. And that's because of the greed part wanting to capitalize on that money here. Or maybe you could call that the fear of giving that money back. Anyway, that's where we are tomorrow. And let's take a look at the play of the day here. There's a couple of them. There's actually a few of them that we took in here. I just want to bring this up to you, just a quick little scalp. We're probably doing more credit spreads in this environment to be able to let theta work against us, but be able to get far enough away from the market. But you can see this little 2-minute here are drawn here about 10 o'clock, or actually about on a 2-minute chart about 9:30. You can see right about 9:45, and I drew it down in here. I wanted to kind of see about where this top would have been. We actually took this particular credit spread right in here to capitalize on that one in here. We took another one in here, the 543s by 553s in here. And the reason I took the 543s is because it's a 0 DTE. It was on the SPY. Now remember, the SPY doesn't close like the SPX does. But one thing I like about the SPY and wider markets like this is that the point of midpoint versus the bid and ask is very tight. Whereas you get a lot more spready based on what your width is of an SPX play. So it's easier to jump around and harder to get filled sometimes because it's got a built-in nickel spread between the midpoint, the bid point, and the ask point at best. So, but you can see right in here, we took this play, nice win here. We actually took the 543s. Like I said, the reason I got in these trades are here because they were in the 15, 16 deltas. Now, when I'm doing a 10 wide here, I lean towards that 15 delta wide. One standard deviation is a 16 delta. If I try to get a 5 delta off that on a 5 wide or a 10 wide in SPX, you're not going to be able to get anywhere near the premium that we had. We had about 90 cents to $1 in these stocks here. And if you're going to do something that early, maybe that early you can get a little better, you'd been around 35 cents or so. So to gain more power, we want to go down up those deltas a little bit to allow us to get into bigger premiums. Now here's why, because if you're taking the 35-cent premium early in the morning and it's a 0 DTE, it might go to 20 cents, it might go to 15, right? But it's going to sit there. There's too much time left in the day for that to burn down to a nickel. But when you have $1, you can always scalp down to 50 cents pretty quick. But it's that last 50 cents or maybe the last quarter, it takes a long, long, long time to burn off. So that's why it's always an advantage to go up in the tree a little bit if you're scalping. And if you're not scalping, you're going to have more risk up here if you're doing a 2-to-1 or a 1-to-1. But if you're not scalping in here, you want to go long dated, you could take far, far out of the money. Give it more than a 1-to-1 though. In case you have a little drawdown here, you'll probably be okay in most cases, other than the last week or so in the market in here. So that's why we did this 90 cents and 95 and basically 90 cents to $1 where these came in. This second one here got us. We re-entered the trade right in here. I bumped it up a little bit here. I typically we're doing about a $500 risk on these. However, I really say that I'm doing 250 because I'm not giving the full stop loss in here. For the room, we typically do that. But when I'm doing this and I'm at $1, I'm share sizing for $2 to be exits. So a dollar loss is how I figure the shares at 5 contracts to be a $500 risk. But I was coming out on this particular stock at half risk. Now, did that pay off this time? It did. It did. Another thing, right, you're doing a 5 or a 10 wide, you don't have, if you're right, it takes a while to get to your target. But if you're wrong initially, it's not backing up on you that far. I've been trading 20, 25 wides and larger for a long, long time. And I've recently kind of got more acclimated with the smaller width in the credit spreads and the bear calls and the bull puts, because it gives me more flexibility to be wrong. So I can lower my stop, increase my amounts, and still, be able to handle more downside than I could on a 25 wide, let's say. Now, you may be at target in some of your other plays, whereas you're still in the play here. But one way you can offset that is that if you start moving towards the target, let's say you're at $1, you go to 50 cents, and you move down to about 70 cents, you can always go break even. 70 cents might equal what a 25 wide would be at target, but you can go break even. So there are ways to kind of overcome that and play it a little bit more closer to the vest, if you will. But this is kind of how we ended up in here. There were some other wins in here too. Some of them were just exiting some of the current trades that I was in on some assignments and things like that I chose to let get assigned. And like STZ and Oracle, and mainly those two as well. So anyways, just kind of, and NVIDIA, which I'm still writing here. We're in NVIDIA from an assignment credit spread here. I put, we sold here at 104.05. And so 115 or 114 here today. And I'm letting that go. We got a target on around 120 or so. So keep you abreast of how this going for us. This is how we actually did today. This was a 30-cent scalp, 30-cent scalp. This was a 65-cent scalp here. Took a little bit bigger picture and a few more contracts in here. And same contracts, I was able to get a little deeper in that. Instead of being 90 cents, getting out at 60, I took 90 cents and I got out at 25 cents. So that's why the bigger money in here. So anyway, hope that helps. Guys, enjoy the rest of the day. Be ready for tomorrow. It's not going to be an easy day tomorrow. Just wait, see, be patient, let things settle out here. And then we can start drawing some trend lines and seeing where the market, what the market might be willing to give tomorrow. So my bias is, I suspect we'll gap up a little bit in here based on these earnings coming out tonight. And, we may move a little higher off the cuff, maybe give some of that back up early as market begins to kind of digest those CPI numbers and some of the people ringing the register from today's gain. So hope that helps. We'll see you on the next page. Take care.